What's going on, everybody? Eddie Dowd back again with Brian Sachs. I'm a real estate agent, he's a mortgage lender, and we're here to talk today about ARMs, 15-year ARMs, 20-year ARMs, 30-year ARMs,
I like legs
31-year
better.
ARMs.
I'm
What
a leg man, actually.
what's that?
I'm a leg man. I'm not into arms, but that's okay.
What type of arm should you get? What type of loan should you get? What's the pros and the cons of the different loan options out there? And what should you keep in mind when you're choosing which way to go in that arena? When you're choosing which way to go, what should you keep in mind to know what best fits you and your family for your needs now and your needs to come?
It's a great question, Eddie. It's one we get asked all the time. And um, let's start by saying this. There are fixed rate loans. That's really simple, right? It's a fixed rate, doesn't change. If rates in the market go up or down or sideways, doesn't really matter. Your loan is fixed. The benefit to that is you're able to budget, right? You know exactly what your mortgage payment is going to be every month. There's no surprises, no guesswork. Mortgages come in 30-year terms, 25-year terms, 20-year terms, 15-year terms, and even 10-year terms. Then there are adjustable rate mortgages, and there's all sorts of variations. An adjustable rate mortgage is just what it sounds like. It adjusts. So you could have a 1 year adjustable, which means that the rate could adjust every year. And there are caps in place, so it can't go up or down more than 2% per year. And then there are 3, 5, 7, and 10-year arms. What does that mean? That means the rate is fixed for 3 years and then it adjusts, or 5 years and then it adjusts, or 7 or 10. The problem we have as we're recording this today, Eddie, in uh, March of 24, is that without getting too technical, we have what's called an inverted yield curve, which means the long term rates are actually lower than the short term rates. And that's usually something that indicates a recession, quite frankly. That's one of the key indicators the financial markets look at. So, why would you take an adjustable rate mortgage? Well, candidly, I wouldn't suggest you take an adjustable rate mortgage unless you're stretching right now and know you're going to have a huge increase in income, like someone who's just graduating law school and is going to get a job with a big firm and go from making 30,000 to 130,000, right? And you want to stretch, or someone that is an intern or resident making 30, 40,000, and now they're going to become a full-fledged, physician. Other than that, unless you also know you're going to be out of the house in 3 to 5 or 7 or 10 years. But there's not enough of a spread to make it worthwhile right now. So generally, I advise people to take a 30-year fixed rate loan. We said in an earlier episode, Eddie, that if you make just one extra payment a year, you can knock 5 years off the life of the loan. But we're anticipating rates coming down as well. I'll tell you something interesting. I've had clients that were in 30-year mortgages. They refinanced with me, and I got them into a 20-year mortgage with a lower payment. So we knocked 10 years off the life of their loan. 10 years. So if they have a $2,000 payment, let's see what that is, times 120 months. You sitting down, Eddie?
I think so.
It
Got my
saves
kid right here.
$240,000. That's an enormous amount of money.
Shoot.
So, one of the benefits right now is if you can refinance and get a lower term and keep your payment even the same or even just a little bit lower, that could be a huge, huge, huge benefit. So, um, you have a little bit of an idea. There is something actually in between, and it's called a buy down. And the way that works is you know exactly what's going to happen. If the market rate today is 7, we could start you at 5 in year 1, 6 in year 2, 7 in year 3 through 30. So it's sort of a mix. You know exactly what's going to happen. You buy yourself a couple years below market rates. It could be negotiated for a seller to help pay for that. Although in this market, sellers, there's just not enough inventory, more buyers than there are homes for sale. So, my suggestion would be a fixed rate loan unless you know you're absolutely going to be out in 5 or 7 years. And then if there is a benefit, do a 5 or 7 year arm. The last time I checked, the 30-year fixed rate was cheaper than the 5 or 7 year arm.
Hmm. Awesome, awesome information here. It's not just a lot of people reach out to somebody like me and say, "Hey, I want to look at this house," and you don't think about the loan option and what you're going to be doing there. People want to think about that at the last minute. So I always advise people as soon as they're thinking about buying a home to start off talking to somebody like Brian and figure out which route they're going to go when it comes to getting a loan, and that way where you're at. The last thing that you want to do is be in a rush to get in a home, and maybe there were some things that needed to be tweaked or something like that, that could have happened previously down the line when you first started searching on Zillow, thinking I'm going to buy, but you held off the loan process because obviously the money stuff gives a little bit of anxiety to everybody, but it'll be in your great benefit to not hold off on that. Be educated on what's going to work best for you, what's going to work best for your family. Even in the case of something that you need to do now to be able to qualify for that loan that may be a better fit for you and your family over the course of time. So this is just my way of saying, don't hesitate to reach out. Don't hesitate to reach out to me. Don't hesitate to reach out to Brian, because you might be kicking yourself, in the butt if you wait until it's a urgent need for you to have to move and your options are a little bit thinner. Let's have a conversation today. As you've heard, if you listen to this video, there's so many different ways of skinning the cat, so many different ways of doing this. We need to figure out what's the best way for you, what's the best way for your goals, and make that happen and set an action game plan to make that happen. So don't hesitate to call me. My phone number is 410-588-6536. Brian, how can they reach you and get all the knowledge they need to get?
443-324-8424, or my office, 443-471-8557. And yeah, there's no such thing as a dumb question. Eddie and I want to give you knowledge. That's what this is all about.
Awesome, awesome. And one piece of knowledge, if you guys don't already have it, if you watch every week, you probably know, but if this is your first time, here's a piece of knowledge that will help you tremendously when it comes to buying a home. You're thinking about it right now. What if you had a full GoFundMe page to where your friends, your family, anybody can contribute to you buying a home? Um, if you give Brian a call or you actually click just the link that we have below this, you can get set up with your home funded account. And that goes right in with CMG. People are able to contribute there, and we give up to $2,000 as well. So great program there, and it's going to help you get into that home. So if you're thinking, don't hesitate, click the link, get started now. Even if it's a couple years down the line, that money's going to be there ready to help you get into a home. But that's all I got for today, guys. Brian, is that all you got?
That's all I got, and we'll see you next week. And if you got a question, leave it right below, and we'll cover it next week.
Awesome. Talk to you guys soon.